All right, break time's over. I know that time flies by when you're having fun. Time to get back to work here this evening, Wednesday evening, April the 1st, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is extremely important. Tonight, my job is to find the best entry setups we're looking for tomorrow's trading session. And I got a jam-packed video in store for you guys and gals tonight. The charts are all ready, as you can see. We got some oil, we got some E-minis, and we got some gold on the docket for tonight's video. We've also got some big news tomorrow, so we'll check the calendar and make sure you guys know when the big news to make sure you know what to avoid and make sure you know what times you've got to be at your desk tomorrow morning. Before we jump into the video tonight, though, I want to remind you, make sure you subscribe to this YouTube channel. I don't want to hear any excuses about missing that next great setup, so make sure you subscribe, hit that bell icon so you always get notified. And how about questions tonight? If you have any questions about anything we talk about in this video tonight, drop those questions in the comment section below. And you know, guys, I appreciate you tuning in every evening and watching this video. If you tune in every evening on this video, hit that thumbs up button for me. I always appreciate you guys supporting this channel by subscribing, posting lots of questions, and hitting that thumbs up button. But enough of the introduction. Time is money. Time is ticking right now. April Fool's Day, first day of the month. Let's kick this session off tonight with the news calendar for tomorrow. Let's grab a look at the economic news calendar courtesy of Econo Day. No April Fools in this office today. Nothing but business here today. Maybe a little bit later. Maybe a little bit later. I got some tricks up my sleeve for some friends nearby. Anyways, let's get on to this thing here tonight. Thursday morning, tomorrow morning, that's what's coming up next here. We know we got some big news, of course, coming tomorrow. We got some international trade and jobless claims at 8:30. Honestly, I don't think that's going to be the big news for tomorrow. I would imagine that factory orders number is probably going to be the big meat and potatoes, the big market moving event that we know about tomorrow, right? That's what we know about. We know that, I would say tomorrow, if you could only be at your desk for an hour or so, I would make sure you're there from 9:45 till about 10:30 tomorrow. That would definitely be where you want to make sure you got all your undivided attention on these markets. And of course, we'll be doing this together tomorrow morning, every morning, 8 o'clock Eastern time. Now, that's what we know here for tomorrow, right? We know tomorrow, of course, has some news at 10 o'clock. Tomorrow afternoon, it would be really important tomorrow afternoon to be very careful tomorrow afternoon because we also know that Friday morning, right? This first Friday of the month, we have, and again, keep in mind, everything's kind of falling underneath this coronavirus stuff right now. But usually the biggest news that we get is that employment number the first Friday of every month. So make sure if you're a new trader, you mark that on your calendar, the first Friday of every month. That's usually the biggest news we're going to get here of the month, and that comes on Friday. Why that's important for tomorrow is because professional traders, big lot traders, they're not going to be able to get into new positions. They're not going to be able to do much as the day gets later tomorrow. So, definitely the morning session is definitely right for the pickings tomorrow. We'll be in our trade room every morning from 8 a.m. all the way through to 11:30 a.m. trading together here tomorrow. So we'll definitely have a full session tomorrow morning. That's not what I'm worried about. What I'm worried about is tomorrow afternoon because, again, just those big fish in the sea, they can't really do much with that big news lingering over on Friday morning. So we know that's a big factor here tomorrow. Factory orders at 10 o'clock. And, again, be careful tomorrow afternoon. Now, that's the stuff that we know about right now. We've had a lot of recent discoveries, though, in the news feed of the past couple hours. On Friday, we're hearing about rumors about a big oil meeting on Friday between U.S. officials, major oil companies. We've heard a lot of different rumors about a price floor, about some extra tariffs. So that might be why we're seeing oil start to catch a bid here towards the end of the session. All I know right now is it's rumors. We are definitely kind of waiting and hoping we see more information on that, and that may change things around for oil as we go. We also heard some rumors here this afternoon about some new treatments for this coronavirus coming out of China. Obviously, take that for what it's worth, but that is something we are tracking here. And of course, everyone's watching for more updates right now on this curve, right? We're starting to see for the first time some lessening or some fewer cases of new cases in New York. Same thing is happening in Italy right now. now. So everyone's kind of taking a deep breath and waiting to see if that curve will start to come down here and we can all breathe a sigh of relief. So that, obviously the virus, right, is kind of that cloud hanging over our heads right now. At any minute tomorrow, overnight, early, late, at any minute right now, we can get some big headline that will get these markets collapsing or running higher. So really the best thing I can do right now is make sure I am ready tomorrow early at the opening bell. We'll be in our trade room 8 o'clock Eastern time. I would definitely make sure you're with me tomorrow around that 9:30 to 10:30 hour. We get that factory orders report, and of course we'll close things up here tomorrow afternoon. Now remember, the best way to do this is to come out and join me every morning as a member of our trade room. I'll put all the links for membership tonight in the description of this YouTube video. That way you can get registered and come trade it with us every morning at the opening bell. Speaking of the opening bell, let's get ready for this stuff here tomorrow. I've got some oil. I got some S&P, and of course we got some gold here tonight. I got a lot. We have a lot to talk about on these charts here tonight. What's the best bang for the buck right now? How about the S&P? The S&P is definitely something on my radar right now. What do we know about the S&P here tonight? Well, as I mentioned in last night's newsletter, we know the sellers have a big target down at that 2,400, right? We talked about that last night. There's a big magnet down there at 2,400 for some previous levels we saw in the kind of in the worst of that crash a few weeks ago. So we know 2,400 is where they're trying to go right now. We easily see these bears have control of this market. I know we're bearish. I want to be a seller at resistance. That's the most important thing right now. If you look a little bit further left here, you'll notice we are sitting at a major low right now, and that's a big deal, right? Because we know that all that movement up, right? This could be a good spot for those bears to take some profit. I'm sure there will be some bottom pickers here, right, for the bulls. I can't say I would recommend that right now, but I would imagine though you're gonna have some bottom pickers here down around this 24.45 area. So we know we're bearish, right? We know we're sitting at a major area of support. We know the market wants to get down to that 2,400. I'm looking for ways to sell this market right now at key levels of resistance. So what I'm doing here is, let me clean up this chart here so we can get rid of some of this stuff here. What I'm doing right now is I'm trying to anticipate where I can find some levels of resistance. Now, there probably is a spike in channel right here. Well, not probably, there definitely is a spike in channel right there. Good rotation back and forth. Spike in channels always tell me to look for a deep pullback back into this area here. That tells me to expect a deep pullback. I don't think that spike in channel is going to be the most important thing on this chart for tomorrow. It is on my radar. You can probably, you may have noticed that yourself, right? Drawing off of those lows up around that high. It fits pretty well, and you would definitely think that this area is going to be a major area for sellers to recommit to those trades. I think we can do a little bit better than that. I think we can be a little more specific with that. I've drawn off of these new lower lows up around that high. This is a spot I'm watching here for a short. I really like this area of what was support before. That is now resistance at that 24.78. You can see they are loving on that level. So I'd love to get that area included as well. But I think the secret sauce here is going to be that rising resistance trend line, right? We see these all the time lately, and it seems like that is really going to be a big factor. So as you can see, we get a lot of resistance here overhead. In fact, you could even put on a spike in channel here and create your own little, right, kind of right zone up there between those two channels. I don't think you could go that far, to be honest with you. I think if we can get up into this area overhead, we should be able to get some nice, good risk reward opportunities here to sell short. Now, with that said, there's a couple problems here we have, and that is how we pull back. If we get a pullback as we go higher here, this is going to create some big headaches for those sellers, because as you can see, this trend line is just a little bit of an obstacle here for those bears, right? Most of the time, what's going to happen is you see a strong move down, you'll see a pullback, we'll see a failure, right? And we can sell off of that high. But whenever you see a two-legged pullback like that, this is where things things become difficult. This is where you have to look for really one of two types of patterns. One would be a trap up above the high here. The other would be a two-legged pullback underneath the low. Again, let's keep in mind here, what is the overall goal? The goal is, because we're bearish, we want to sell at resistance. I've identified some key levels of resistance up above me. I want to sell in those areas, but one of the keys to success if you're trying to be a seller is to avoid selling into support, right? It's great to sell at resistance, but I don't want to sell into support. So what's the best way for me to avoid, and this is very important, I'm going to write this down, what's the best setup for me to avoid selling into support or buying into resistance? In this case, it'd be selling into support. It's going to be a trap. And so that's exactly what I'm looking for here, is going to be a trap high to basically get enough space away from that trend line. Now, what usually happens is you'll usually see something like this where it'll jump up, and as it starts to pull back, the sellers in the market, they want to get short, but they see that trend line. And what usually happens here is, as that moving average comes up, the buyers will try to buy off the pullback, right? Like they always try to do. Now, normally I would look to short this, right? Because it's a buyer failure off the high, as we talk about nonstop on this newsletter. But in this example, though, with that trend line coming up, this is a spot where I'm looking more specifically here for a little bit more advanced pattern. It's almost like a crown reversal, right? But it's basically the buyers will come in, they'll probably try a shallow pullback. We obviously don't know exactly where that will be just yet. It'll be somewhere up in this area. And what will happen is the initial sell will usually fail. They'll trap low and then trap high up here. That's the short that I want. Nice strong red candle. That's where pros are going to be looking to get that nice, juicy, right, small amount of risk for a big amount of reward. A trap high up above that high is something I'm watching here for tomorrow. Now, we may also, of course, have this thing jump up. Let me use a different color here. Let's do this. Let's go orange here. Get my crayons out here, right? If we can get underneath it, here's another thing to keep in mind here tomorrow. Let's just say, for example, that the market goes up and it shoots back lower again, and we really don't get much of a setup. What oftentimes happens is it'll grind, come back up and give you a shot to sell off the underbelly of that trend line. Again, these are called two-legged pullbacks just because of the way the market went one leg and then two leg. So those are two setups I'm watching for here tomorrow. And really what you want to think about is whenever you have a challenge where you want to be a seller, but you don't want to sell into support, that's when you want to use those traps, right? This is a great example of how I want to sell short, right? But I want to make sure I'm doing it without selling directly into that. And what usually happens is you can get some rookies roped in and then sell into their stops, which will get you through that trend line. So traps above the high, right? And of course, that two-legged pullback. Now, I want to remind you, we'll be doing this together tomorrow. If you're not with me in the trade room, the next best thing is to grab the free trading course we have here at School of Trade. I'll put a link up here in the upper right-hand corner for you. That free course will go over things like traps and two-legged pullbacks, along with all my favorite entry setups. So if you're not with me tomorrow at the opening bell, again, 8 o'clock Eastern time, we open up Monday through Friday, and we trade together as a client of mine, make sure you grab that free trading course in the upper right-hand corner. I'll also put, again, all the links from tonight's video. I'll put those below the video tonight on the blog or in the description of this YouTube video. All right, so what else can we do here? Because I know what you're thinking. I know what I'm thinking, right? Isn't there a lot of potential? I mean, couldn't these buyers, couldn't they jump off this trend? I mean, couldn't this thing reverse? Oh yeah, it definitely could. It definitely can. Now remember, sometimes a rising support trend line, right? Sometimes a rising support trend line will look like it wants to reverse, but remember, what does the reversal look like? It's got to jump off that moving average. If it can't jump off that moving average, you've got to simply wait for it to get back underneath and hit it, right, as it goes back underneath. That's the trick. So as we go higher here, don't try calling reversals yet. Once they jump, though, once we get that jump, once we see that strength running higher, didn't get it back here, but if they can get that strength now running higher, now what I can do is I can mark up those new highs, I can find a new hidden channel, and I can buy that that pullback off the low of that hidden channel. I call these 1, 2, 3 reversals, as in 1, 2, 3. Again, big push higher here, reversal, and then of course we'll draw that new trend line, new channel off the low, and we'll try to buy the low of that, right, of that channel. Now again, very, very clear on this. You have to see some very strong momentum off of that move to even think about being a buyer on this, right? So if it kind of grinds its way higher here, if it grinds, you know that's not a reversal. I just sent an email out to one of my potential new clients here today, and I said the key to a reversal is that jump off the moving average. That's all you need for trend direction, at least in my experience. Now, what if we don't get that pullback? A lot of times what will happen is the market will grind, and then bam, right? Big jump up. We know they're trying to fill that gap. Well, it's not filled. It's been filled before, but that 25-20 is that level we've been talking about all week here. That is definitely where these buyers want to go. Also watching for a 2-try trap pattern. This is kind of the same thing, right? Except the buy side now. Yes, I would love to incorporate it with that trend line. No, it is not required. What is required, though, is to get a strong jump, a shallow pullback, 1 and 2, and basically what you're doing is you're waiting for a strong spike higher. You're waiting for sellers. Well, usually the first one's profit taking. Then the short sellers come in, and once those profit takers are out and the short sellers come in, now everybody who got out on the first pullback, they're going to chase after it again. And of course, the bears who got short, those poor bears, right, they're on the wrong side of this market. Their stops are just sitting ducks there. So when I see a market that runs like that, right, when it really jumps like that, the first people take profit. And the profit takers, right, then become buyers, and of course, they're going to chase back and get back in. Those are a couple patterns I'm watching for as we go higher here. Now, we can make this a whole lot easier. We can make this a whole lot easier here with two scenarios here if they go sideways down here. This is almost like what you're waiting for. You're almost hoping we go sideways down here because that will get rid of that trend line. You know what I mean? Because we have a very strong move down. They should be able to retest that low. So keep an eye out for maybe a double bottom, double top. This may become a range down here. And once we have that range, keep those levels, right? Keep those levels up overhead, because anytime I see a range, what do you think? Failure patterns and breakout patterns, right? So if we start going sideways here, I want to see it pop up. I want to see buyers come in and try to buy that pullback, and we can look for those buyer failure setups off the high of that range. And again, failure patterns are also covered in that free trading course that I mentioned earlier. So if we do start going sideways here, stay out of the middle, focus on selling above those highs. Now, what would really make our job easier is if it keeps grinding lower. Because if it grinds lower, this will probably either be a channel or a wedge, right? We've seen a couple of these already. And anytime we have maybe a wedge or a little channel down here, we know to find more traps, and we know to go up, right? Buyer failures and sell back overhead. So you can imagine here, if this thing continues to run lower, we may end up seeing this thing, right, start to kind of grind lower like this, right, which would make sense. They're trying to get down to the measured move. They're trying to get down to that big round number. If that happens now, just focus on those edges. Focus on those edges. Wait for the pop. Eventually, the sellers will stop selling. We'll take some profit, and the market will pop up. That will almost always pull back to the moving average. The buyers will try to buy off the EMA, and we'll look for that classic basically a profit-taking bounce into a buyer pullback failure to sell it back down again. We're not trying to pick bottoms. We're letting the other poor rookies in the market pick the bottoms, and we're trading into, right, when it mostly comes back down to retest. Every once in a while, they'll hold it, right? Every once in a while, you will see a full reversal. You will see it jump up. You will see them hold that pullback, and you'll see it run. And once it runs, you'll know there's my new channel, and you'll know to buy off the low of that channel. If you watch this newsletter every evening, this is very much what we talk about here quite a bit on this video. So now we got a pretty good plan here for us on the S&P. My biggest concern is if we pull back right now with that rising support trend line. And again, I've got this right. I've got this I've got these headlines we're watching right now, these rumors coming out of Asia. We may see some good news. We may see some bad news. We heard from President Trump of the U.S. yesterday calling it the most difficult 2 weeks are still ahead. So we may start seeing some numbers pile up right in the next couple days here, which may continue to bleed this market down. Buyers want to get back 2520. Sellers are keen on that 2400. Don't forget tomorrow morning, 8 o'clock Eastern time, we're going to do this stuff together. Let's grab some gold here, some yellow metal. Gold has been very quiet over the past couple days. You probably have noticed volume has been very, very low. I think you can definitely tell the world is waiting on something here. It's very obvious the world's not coming to an end because gold would be around 2,000 right now. I've seen that situation many times in my career. This is definitely not the end of the world doomsday scenario on gold. It could change pretty quickly, and that's something we're watching closely, but you can definitely tell the low volume right now as a fundamental issue really tells us that people are pretty optimistic we're going to get through this. Now, what do we know about gold right now? We know we're bearish. That is for sure, right? We know we have an overall bear bias to it. Bear markets tell me I want to sell at resistance. Be very careful buying at support. And if I can kind of trim down a lot of the stuff on this chart, keep in mind below the video tonight, you'll see all these charts posted right below the video and the text on our trading blog. So I got my measured move up there, right? We know there's a measured correction or a measured pullback level overhead. I'll take the lines off there. I want to make sure you can see the real meat and potatoes here. The most important thing right now is that 1600 big round number and that range. Now, when I say range, I'm thinking balanced market, right? When I say a range, I'm thinking there's a magnet right in the middle. Right? We talk about this quite a bit on the newsletter. When I think range, I think balance. I think magnet. I think what goes up comes back down. I think what goes down comes back up. Remember, when the markets go sideways and the moving average flattens out, what does that tell you? It tells you buyers are content where we are, sellers are content where we are, and it won't be until we get some news headlines or some economic news or some natural disasters or some political stunts, right? It won't be, we have to have a catalyst to break out of this range. Until we get that catalyst, and again, we're watching headlines closely right now. We'll do it together tomorrow morning as well. Right? We're watching headlines, we're watching for catalysts, but until we get that catalyst, until we see that 1, 2, 3 break out, until we see that 1, 2, 3 break down, until we get those breakout patterns, we've got to focus on buying low and selling high. Since I've got a bear bias, my focus will be on finding levels of resistance to be a seller. So I'm doing is I'm taking that trading range. The size of that range helps me identify my sell zone overhead. It also identifies my buy zone below. You'll notice I have two types of sell zones, 1 and 2 overhead. I've also got a runaway target, a reversal target if you go higher here. We'll talk about that in a moment. And the reason why I break these up like this, the reason why I break them up into 1 and 2 is because it helps to identify the type of pattern that I should be looking for based on our most important tool, and that is momentum, right? Momentum is the most important part of day trading, especially if you're using a small account with a small stop. If you had unlimited capital, you wouldn't need to worry about a small stop. You could just keep buying whenever you want to buy. But for most of us with small stops and small stops, small accounts, right, or big accounts with small stops, that happens too. We know that we have to be very careful with timing our entries, and momentum is going to be the key to that. So if I go up into the first sell zone, I can look for simple buyer failures, right, where the buyers sort of buy and we sell back down again. But if I see a very strong move up now I look for those nested failures. Look for those 1, 2, and then sell back down again. So those areas, right, 1 and then 2, those are there for a reason. And we'll dig into that a little bit deeper here in just a moment. I also like this trend line overhead, right? I really like, anytime I have a trading range, I always like to look for my triangles, right? My expanding triangles. Remember, a range-bound market says to buy low, sell high. So I can use that that triangle low as a key level of support. I can use that triangle high as a key level of resistance, right? Makes sense? And you can see how that really looks good bouncing off all of these areas already. So that's a very important part of this process as well. Again, I've already got the one leg, two leg there. That's my measured move. You know where that's coming from. So now we get a pretty good plan here, right? We know where this, and again, all these charts are published on the blog at Sideways Markets. I'll put all the links in the description of this YouTube video for you, or if you're already on the blog, it's right below you here on the video. So I want to be a seller, right? I want to sell up at resistance. It really has a lot to do with how we pull back. I've got that trend line here coming over. If we get up into that trend line, momentum's not going to be a very big, not very strong on this. So at that point now, I'll simply wait for buyers to come in, try to buy the pullback off the moving average. Once those buyers sort of buy the pullback, now we know exactly where their stops are, and we can sell into those stop losses for a buyer failure pattern. Again, you can see an example of that right before this, right? Basically look left right back at the beginning of that session. Same thing here we're looking for over at the top. Now, what if it really jumps though? If it really jumps into that secondary level now this becomes a lot more bullish. It's not a bull market yet, but it's getting closer, and we have to respect those bears, right? The bulls. They're not going to give up without a fight this time. So now we let them try once. We let them try twice now. Once I can get those buyers trying twice on that pullback, now I know everybody's in the boat. And now we can tip the boat over. Basically, if sorry for the graphics on that, right? But we know that's what they're doing, right? Once those buyers have dug their grave, right? Once they've wrapped that noose around their neck, now we know exactly where all those stops are. And we can sell into those stops. Now, the most important thing to keep in mind is the failure is usually pretty easy because, once you see 1, 2, you know where stops are and we're selling into it. What you want to keep in mind, though, is a lot of times we'll get one more pattern, and that is that two-try trap pattern. Remember, when is the best time to use a trap? Whenever you're worried about selling into support, right? Like selling into the low of that range. That's where you'd use a trap again. So anytime you're worried about there's a support trend line, there's a support level below me, I want to sell, but how do I get short without protecting myself? Trap patterns are going to be your go-to patterns on that. So a nested failure, right, into basically it's a two-try trap, it's a bull trap, a trap high above that prior swing. Now I know what you're thinking, right? So how do we get up into that, right? At what point does a strong move up turn into a reversal? Well, remember, what you need is to show me proof and hold that pullback, right? Because you can go, we get lots of very convincing breakouts in range-bound markets, don't we? Right? I mean, look at how convincing that was. That was convincing too. That was very convincing. All of these look very strong when they break out. But as always, when those strong moves come, they've got to hold that pullback. If they can get some leverage off that moving average, we can be a buyer now. If they can't, we've got to sell it. We go up. If they can't hold it, we've got to sell it using those stops as fuel. So if I can get a nice strong jump up, absolutely, that gets me in the mood, but it definitely doesn't confirm until we see a jump off the moving average. Once that jump comes off the moving average, now we know we're bullish. I'm going to mark up that hidden channel. I always like to find those hidden channels off the low of that move. Now I know exactly where I want to be buying, and I'm buying off the low of that channel. Again, right, we're not taking the first one. The first one's not reliable. I realize we all want to get in as early as we can. It's not fun to watch a trend reverse without us, but the reality is this is a 30% trade. Right, that's a 30% trade, and that's probably a 78, almost 80% trade right there. You can be you be the judge. Which one do you want to take? It's very simple, right? Very simple. Yes, you will be able to brag to your buddies about predicting that reversal. The problem though is they're going to want to hear your sob story too when you blow your account a few weeks later. That's the deal, right? If you're looking for congratulations on predicting reversals, you better post your losses too, right? You better talk about your losses too, because a lot of those are going to fail on you and go back in. I would much rather build my career on that second pullback. Yeah, it's not as sexy, it's not as profitable, right, as predicting reversal, but it's a hell of a lot more reliable, and it's something you can feed your kids with in the long run. Now, we also may see, sometimes these markets, they rip higher. Right? Sometimes they rip higher, and as they rip higher, right? Once we start, we might see something happen overnight. We might start seeing a rip higher here. If we get that big rip higher, I look for that 2-try pullback or that 2-try trap. It's a very strong move higher first, a shallow pullback. That's usually what gives it away, right? That shallow pullback doesn't pull back to the moving average. At that point now, we know buyers are going to be waiting right below that low. And really the key to this is I want to see a strong move up. I want to see a little higher high there, shallow pullback. Traps. Why traps? Because I'm worried about buying high. Right? We always want to look for traps after those big, strong moves like that. I know. In a perfect world, we'd get in during the move. But you can't chase after trades. You can, but the problem is when you chase after trades, you're not able to structure your risk and reward. When you chase after a trade, your stop has to go in nowhere's land, right? You have to pick an arbitrary stop. When you structure with a pattern like this, it allows you to properly structure, this is my risk, this is my reward. It's something you can build on rather than just chasing after everything and jumping in and I'm in and I'm out, right? That's a very unsustainable that's a very unstable way to make a living. When you use patterns like this, you're able to structure your stops, your targets, and you're able to take risk management into account along with probabilities. So we know that's a good pattern we're looking for as we go. Now, if we stay sideways, stay out of the middle, right? Stay out of the middle. Now, how do we buy low off of this low? Is there a way to buy low off a bear market? We can. We just got to make sure we use a more patient pattern, right? Patience is a good word for it. Because as we go lower, I know I've got a buy zone down here. I know I've got a trend line down. I know I have support that I can work with here. I know the magnet's back into the range. I just have to be very careful, though, because we're so bearish. What I'll do in these situations is, instead of your typical seller failure back in, we just simply like to stack them, right? 1 and 2. Once I've got the bears now trying twice, now I know everybody's in the boat, and now I can buy right into those stop losses. If you try to get aggressive on this and you try to be a buyer right into that seller failure, oftentimes it'll go up, it'll make you feel good for a second, and then it'll come crashing back down, it'll stop you out, and then rip your head off as it runs higher. That is a very common kind of rope-a-dope. It's a range. It's very tempting to want to buy it, but you've got to give those bears a little bit more of the benefit of the doubt. Let them try once, let them try twice. And again, this will usually be just above the moving average, and now you know exactly where stops are, and you can buy right into those stop losses. Now, we also talked about yesterday how there's a big, big bullseye if these bears keep going. I can't even get the chart to go that far, back at 1,500 right now. I know it's old pipe dream right now, but if you look at a bigger picture chart right now, there's basically 1,600 and 1,500. Those are the two big areas of consolidation. So if things go well tomorrow and the news is nice and rosy tomorrow, maybe, right? We may see a very strong move lower here on the gold. Two patterns I'm watching for. 1, 2, 3 breakout is the first one. Got to hold that pullback. Now, once I see them hold that pullback, it's on. Now we know the range is gone. We know the range is, or the trend is bearish, looking for levels of resistance. I'll mark up those lows, right? You only have those lows to work with, right? That's all you have to work with at that point. Okay, I'm not going to draw the channel like this. This is going to be a wasted channel, right? Draw off the lows, find the highs. That's your hidden channel. And then I'm telling you, this is the one you want to wait for, right? Skip the first one. Grab the second one. What I always tell my clients is that this requires a lot of patience, but then once you get the 1, 2, 3, now it's time to get aggressive. And this is, I'll be honest, this is one of the harder parts about being a day trader. You have to be able to turn it on and turn it off pretty quick, right? It's a lot like being a baseball player where one pitch is a fastball, the next pitch is a slider, and you're waiting for the curve. And you got to be willing to wait for that and then adjust as you go. You can't be too aggressive most of the time in these markets. You can't be aggressive trying to sell short down there. You're going to see lots of these. Right, you'll see lots of those where it runs, they fail, and right back up into the range. You can't sell that, right? You can't sell it short first. Wait for that next one and follow it up from there. If we really dive deep, it really just dumps here, then obviously that 2-try trap is on our radar as well. This is a very unique scenario though, because it will be, it'll be a collapse, right? You'll notice it. It will be obvious. It'll be big candles. There'll be big headlines. It'll feel like this thing's never coming back. Don't chase after it. What I look for is that shallow pullback, I look for that lower low, right? And then again, hit it. You got to hit it hard once you get that little trap high. I don't want to sell low. I want to sell high. That's the place to look for traps. So now we got a pretty good plan of attack here. We know how to sell it as it goes higher. We know how to trade the reversal. We know how to trade the breakout. When I say range, you think what? Failures and breakout patterns. And again, we cover all of that, right? We cover breakouts, failures, pullbacks, traps in that free trading course. And again, right, the video course can only take you so far. Doing it with me in the trade room every day is really the secret to success, to master it with me by doing it with me. All the links I'll put here in the description of this video. All right, I saved the best for last. I'm kidding with you. I'm almost bit my tongue. It was so far in my cheek in my cheek on that one. This one's definitely not a pretty market here. You can definitely tell that oil is waiting on something. This is that news I was talking about. It almost looks like there's some news floating around there. From what I'm seeing in the headlines right now in our real-time news feed, it does look like there's going to be a big meeting on Friday. I've heard everything from a $50 price floor on U.S. oil. I've heard about tariffs for various countries like Saudi Arabia. So we may see some pretty active markets here on crude oil over the next 48 hours, next 2 trading sessions. So these are some big unknowns right now we're watching here on oil. Obviously, maybe not obviously, but what do we know about oil right now? We know we're range bound. We know there's that big old range here. Right, if I zoom out a little bit further on this thing, there's that big old range on this chart. This is pretty much the same range. Been watching here all week, right? We are buying low, we are selling high, and we are avoiding the middle of this range. The most important thing right now, you can see here, it does look like that big bull run up. We got to remember, anytime we have a big, strong move in one direction, there's a bullseye, right, to go back to retest the high. What it looks like we're going to do right now is, it looks like these buyers, from what I can see, it looks like they're trying to get up into that high, probably give a little pendulum swing, a little kiss, and then probably try to bring it down or hold it and make a move back to 25. That's what it looks like right now. And again, it's tough to tell how much these rumors that we're hearing are actually legit right now, because the world is filled with, different rumors going around these days. So we know this could be something, it could be nothing, but right now we want to be looking to sell above the high of this range. I have my trading range. I know I want to sell high. I know I want to buy low. The big problem is, and we go right back to where we started off this video tonight, if I do want to sell high, I've got this trend line coming in. And that trend line is definitely something that I've got to be watching for here. I want to sell high. I would normally look for a seller failure or a buyer failure and sell off the high here. But with such a strong move going higher here right now, I've got my trend line overhead. You'll notice that trend line there, that trend line there. I'd like to honestly use that trend line for that same trap pattern we talked about earlier. That would really be the ideal entry here as we go, right, as we get short off these highs. I've got that same problem that we had on the oil. Now, I'll be honest, this is a much wider space we have than we saw on the S&P. If you recall, the S&P was like almost vertical, right? So it was difficult to get short around that trend line. This one's not as bad. It's not going to be easy, but it's going to be, right, same basic pattern. As we go higher here, I want to be a seller. I've got a very strong momentum move. So whenever I see a strong momentum move, I want to be a seller here, but I have to sell what? I've got to sell after the buyers try twice. Once, twice, and ideally to avoid that trend line. Right? When are traps necessary? Traps are necessary whenever you're worried about selling too close to a level of support or buying too close to a level of resistance. Which reminds me, if the market goes higher here and we know where they're trying to go, could I try to get in long up here as well? You definitely can. Now, my big concern is we got to do it before we get there, right? So when they open up here in a few minutes at 6 o'clock, we may see this thing jump up to those highs, but we definitely could see a move up, a shallow pullback, a higher high, and of course, a trap off of that low, because after all, Buyers want to buy low. They don't want to buy into those highs there. That's that same two-try trap pattern we've talked about here so much already. So here in the crude, we know we are range bound. We know we are overall bearish right now. I want to be a seller. The problem is I don't want to sell into rising support, and I've got that big, strong push higher. So how do we kill two birds with one stone? We look for traps. 1, 2, trap, and go. That way we're selling high, we're respecting momentum, and at the same time, we're not selling into that rising support trend line. That will be a very easy way to structure that trade going higher. And again, if you like wooden roller coasters and the Empire State Building, right? If you like a little bit of risk, like if you like a bit of adventure, right? I would definitely grab the that two-try trap on the way higher here as well. We'll use that as well. That's obviously needs to be before we get back up to retest the high. Now keep in mind, as we go higher here, we get that pendulum swing. The same pattern can be used here. We pull back to the moving average. I don't want to buy up here because we think that's probably where they're going to dump it from there, but momentum's too much at that point. 1, 2, again, I would love to get some traps up here to sell short back down into that trading range. Or maybe we jump up, we collapse back down here, right? And again, I'm worried about that trend line as we go lower, a two-try trap on the way back down again. There's lots of different ways we can use traps right now. Traps are effective in this situation because we've got rising support that we have to be careful about. Another scenario you want to keep in mind would be, right, we know we go up, we can look for that two-try failure off the high here, but what if we go up and we go sideways here? If we end up sticking around these highs and go sideways up here now, the longer we sit up there, the more this range turns into a new range. And I would say if we can spend a good, maybe an hour going sideways up there, we can now start looking to buy underneath that low. How do you buy the low of a range? Look for a failure. When I say range, you think failure, right? So seller failure pattern and buy back up. Now this will be after we spend at least an hour, right? 45 minutes to an hour going sideways inside of that range. You're going to want to see a lot of stickiness up around that 22 even area. And once we get that, then we can use one of those seller failures. Basically, it's a breakout pullback failure on it. What I'd love to get though is I'd love to see a nice 1, 2, 3 reversal, really jump through those highs, get that new channel on here, buy the low of that new channel. Or, if things do get crazy out there, if it really jumps, right, strong break up, shallow pullback, higher high. And usually these again will be just below the moving average. I always like to look for those hidden channels to combine with them. There's nothing better than a strong momentum move, the bears trying twice, getting below the moving average, right, and getting a nice signal off a new channel. Nothing better in my book, right, no matter what market you're trading. Strong momentum, buying off support, catching the counter trend sellers, getting too greedy, trying to sell highs. That's a great setup that really every trader should learn. Now again, as we get back into the range here, don't forget, right, if we sit back into this range here tomorrow and go sideways, we're still looking to be a buyer below these lows. Right, so we'll keep looking for those seller failures, going back in. If this thing just dumps and runs all the way through that trading range, that momentum is way too strong for me now to be a buyer. In this case, I do want to buy low, but I have to respect that momentum. Momentum tells me we look for, you got it, those nested failures, and then we can be a buyer going back up from there. It could also, too, 1, 2, 3, and run. There's no reason why some news headlines overnight couldn't come out. We pull back to the moving average and we run. We haven't seen any of that in the last 24 hours. If they can run off of it, pull back and hold, then I can find my channels, right? I can find my shorts on the way down to that pendulum swing that everyone's watching here as well. So hopefully by now you can see a lot of the same strategies we apply on the other markets. We can apply those tomorrow for crude oil as well. Make sure you remember, too, that trend line coming up here that tells me, right? Look for traps. Look for traps for that sell. Stay away from that middle. If we do collapse back down, it's that nested failure. Back up, collapse back down, hold the pullback, and run. It's a reversal. Find the channel, sell off that channel top. All right. I think I've covered all the details here in pretty good detail tonight, guys. Don't forget, make sure you come back and join us tomorrow. We'll be trading this stuff tomorrow morning and every morning in our trade room. Our advanced course is what you want to register for. I'll put all the links in the description of this YouTube video tonight. If you're on the blog, the button will be right below the video. Get registered for tomorrow morning's trading session. You got to be a client. Our advanced membership is the only membership that gives you a lifetime trade room access, all the ongoing support, all the tools. You can learn more on our website. Don't be afraid to call me tonight if you guys have any questions about getting started. Use that live support if the telephone isn't a good fit for you. And as always, if membership isn't a possibility right now, the best thing you can do with your time right now is to grab that free trading class, learn the setups. That way you and I can get the most out of working together every evening on this video newsletter. What do you think? Give me a thumbs up if you liked the video tonight. Subscribe that we don't miss the next one. And if you have any questions, drop those questions in the comment section below. As always, guys, my name is Joseph. Be well out there. Be nice to each other right now, right? Take care of your neighbors right now. Everyone's battling this stuff together. As a trader, though, be here tomorrow and be ready to trade tomorrow. Looking forward to seeing you guys tomorrow at the opening bell. If not tomorrow, we'll see you guys in the next edition of our nightly newsletter. As always, be well, be nice to each other, and be here next time, guys and gals. Adios, amigos. Bye-bye for now.